Hi everyone. Thank you, Jessica. Thank you so much, Adam and all the organizers. That's such a great event. We're really happy with the show, with all the 80 speakers, so many attendees, so great success. So our panel today is about the stablecoins, DeFi enterprise, CBDC, and we have incredible speakers. James, Dante, Dr. Win. Would you like to introduce yourself?
Me?
Yeah, sure. Everyone, just go one after another.
Sure. Thank you, Masha. Thank you, Global DeFi Summit, for having me here. So my name is Win. I'm representing IBG Finance. So we are the world's first fully insured DeFi platform, basically focusing on robo advisory, something similar to what wealth management robo advisory platform is doing, but exactly on a DeFi platform. And I'm based out of Singapore.
Thank you. Dante?
Great. Hello. Hi, Masha, and hi, everyone. It's great to be with you. I'm Dante Disparte. I'm the Chief Strategy Officer and Head of Global Policy for Circle, the lead architect behind USDC, the world's fastest growing and most trusted dollar digital currency, now a $25 billion stablecoin in circulation around the world, empowering many of the conversations that you have certainly had around DeFi and having a trusted instrument that was native to the internet and native to public blockchain. So really happy to be on the conversation this evening.
Thank you, James.
Great, thanks, Masha. And it's a pleasure to be here today, and really looking forward to the discussion with my fellow panelists. My name is James Wallis. I work for Ripple. Ripple is a fintech based on the West Coast in San Francisco. We have a global payments network which operates in more than 55 countries, cross-border payments, and then also we have a number of initiatives around developing new use cases, and specifically my role is leading our efforts with the central banks around central bank digital currencies, and looking forward to sharing more of that with you as we go through the discussion.
Awesome, thank you everyone. So maybe my first question, something that also audience would be interested at, maybe you can tell us more, James, about your current work at Ripple. What are the developments with the central banks, and what are the news? How do you work with stablecoins, and what is Ripple currently doing, which is new and exciting, and what is the roadmap for the next few months?
Yeah, thank you. I'll give a quick sort of overview of what we're doing at Ripple, and then I'll sort of drill down a little bit into the central bank side, if I may. So, as I mentioned, Ripple has been deploying a global payments network. The company's been around for 7+ years. We're focusing on improving the overall experience and speed and efficiency around cross-border payments. The newest innovation that really we believe is a game changer is the use of XRP as a crypto asset to facilitate the cross-border movement of money. So in the old correspondent banking model, you have to pre-fund accounts if you want to send money from one country to another. We avoid that, which potentially frees up trillions of dollars stored in what are called nostro accounts within the correspondent banking model. We do that by transferring money, say in the US, from US dollars to XRP into, say, Mexican pesos at the other end, and that's all done pretty much instantly versus the old correspondent banking model. So that's the sort of RippleNet side of things. I'm working on a relatively new initiative around central banks. Now, just to put a bit of context, central bank digital currency is fiat-backed digital money. So like, for example, a digital dollar that would be issued by the Federal Reserve System, or a digital pound that would be issued by the Bank of England. We have a sort of strategy around digital currencies. So we, within RippleNet, we use native XRP for our on-demand liquidity transfer cross-border. We have work going on in the stablecoin arena, and then we're working with central bank digital currency. So our philosophy is these different forms of digital assets will all have a place to play in the future of finance. So we're not sort of saying it's one or the other. We think there'll be a combination. On the central bank side, what we're doing there is building on the relationships we have with central banks through our Ripple network. So we have to work with central banks to get approvals when we go into a new country with our RippleNet products. We're building upon that, and we've been talking to central banks for quite some while around what technology they would like to deploy their central bank digital currencies, whether that be for wholesale central bank digital currencies or retail. And they want a private ledger approach, right? So what we've done is we've taken the XRP ledger, which is a public permissionless public network, which has several currencies on it already. I mean, XRP is the native currency, but there have been several thousand other currencies issued on the XRP ledger. We've taken that, which is really built for high performance and built for payments, and we've created a private version for central banks. So that enables a central bank to basically mint or create their currency, distribute it, most likely through commercial banks, and then actually monitor the transaction. So we're working with them on that technology, and then also working with them on the policy, which is going to be a big element on the success factor. I'll take a pause there and let my fellow panelists say something.
Yeah, and if you don't mind, which central banks in which countries are you working on or working with?
We're working with many of them. They're mostly under non-disclosure agreements, so I'm not at liberty to share the details. But I would say, we are working with them in each continent apart from Antarctica. The study by the Bank for International Settlements estimates, I think, 80 to 85% of central banks are doing some work. We're at different stages. I mean, we have some active projects, and then we have some early stage discussions. A lot of the banks are still doing research rather than deploying projects. It's relatively early in the life cycle, I think, for CBDCs. I think it's going to be 2 to 3 years before major economies like the US or the Eurozone deploy a CBDC. China is obviously further ahead at the moment. They are well advanced on their pilots.
Yeah, thank you. That's really interesting. Dante, maybe you can tell us a little bit more about what are you guys doing at Circle, about what are the recent developments on stablecoins and also on the DeFi, if you're using any DeFi products or working on this.
Yeah, no, thank you, Masha. So at the beginning, we are just today announced an early access period for a new institutional grade DeFi solution, which will, of course, power a range of offerings and a range of investors and other capital allocators to take advantage of all of the opportunities that DeFi represents in terms of programmable access to finance without the costly intermediation and, frankly, the costly brick and mortar infrastructure that has stranded so many trillions of dollars of opportunities on the sidelines of the global financial market. So we're really excited about that. I think similarly, there's just an enormous amount of development and evolution at Circle. While the conversation about CBDCs remains somewhat abstract, and I'm actually very glad that it is, because ultimately it would transport a lot of the billions of dollars that is being spent on public infrastructure, public blockchains, and responsible privately issued digital currencies like USDC. It would transfer that free market activity into, candidly, a taxpayer-funded science experiment. So we have to be very thoughtful about the future of money and payments. And so in Circle's view, we have today more than $25 billion of USDC in circulation. The reserve assets are inside the care, custody, and control of the US financial system. And we're designing a business model that comports with exactly what the central banks and other regulators and policymakers would like to see in terms of responsible innovation on public infrastructure. But the posture ultimately is about competition. It's about lowering barriers to access, democratizing access to payments and money, and addressing all of the fundamental challenges we have when you consider the fact that so much of our financial infrastructure has been unchanged until the 11-year-old or 12-year-old cryptocurrency and blockchain industry started addressing this question of access on the internet and this concept of a free internet of value existing, while at the same time addressing a lot of the exponential issues or exponential opportunities for improving financial crimes compliance, access, digital identity, and all these adjacent issues. So Circle is a company that's not aspirationally talking about these issues, kind of like the CBDC conversation. We're operationally addressing these realities today. We've powered more than $700 billion of on-chain transactions with USDC at the core. And this is an instrument that exists across blockchains, powering DeFi, powering NFTs, powering real-world transactions that are low friction, high trust, and peer-to-peer. So in so many ways, we're really excited about the future, not only of the company, but of the industry. And that's the bet I would make, that that private activity, consortium activity, open competition is the future of money and payments.
Okay, thank you guys. So I have a law degree, and I'm a lawyer. So I worked as a lawyer and in regulations, also in blockchain regulations sometimes. And sometimes I ask myself a question: do we have to regulate everything? So I recently read the news that the Central Bank of Thailand was also speaking about regulating the stable coins. And my question to the panel would be, do the stable coins need regulation, need a stricter regulation, or can they be as they are right now and they're not doing any harm and they can just stay as they are? Or do we need government to intervene and regulate the stable coins?
So I'm happy to provide commentary on this, and perhaps others will add to this as well. First, I would say ignorance of the law doesn't mean any sector is above it. And when regulators talk about principled approaches to regulation of new technologies or payments or other instruments, they talk about this concept of activity-based regulation and technology-neutral regulation. The reality, however, in many countries is that when it comes to blockchain and crypto assets, regulators have been discussing that in spirit only, and then have tried to figure out how to effectively bar many of the activities in the space. That would be one just open statement. The second is that it's pretty clear that not all stablecoins are created equal. And we have had in the blockchain industry an era of internet funny money in which what was backing, the reserves, for example, backing instruments purporting to be stablecoins were opaque, they were intransparent, or they were illiquid, or critically, they were outside of the banking system. We have taken a posture at Circle that building inside the regulatory perimeter is an important first principle, because something as sacrosanct with people's money should not be played with. At the same time, arguing for an open internet of value in which access and the ability to send, spend, save, and secure your money as freely as you and I might enjoy the exchange of information on the internet should be a fundamental right and a first principle as well. So I think above the regulation are a series of first principles that we have to really address. And frankly, I think many of them are challenged even by central bank digital currencies. I do not want my central bank to know where I am, what I'm spending. I don't want to be deplatformed from my money if it's a public good. And so I think these questions need to be asked as well. So I think regulation is absolutely important. Prudential standards are important. Consumer protection is important. But more important than any of those is the ability to create universal access to trusted forms of payment on the internet. And that's why blockchain and this entire space is such a fundamental issue that we have to protect and preserve, especially in free economies.
Dr.
Yeah, maybe I'll share. So let me just share with you about IBG, what we are trying to solve. So IBG is actually a robo-advisory platform. And what we are trying to solve here is the kind of activities which we can apply in a wealth management platform or any of the traditional banking system, which should be able to do the same process here in the DeFi platform or purely a decentralized platform. So we are trying to solve that problem by merging these two different universe into one by bringing in a layer in between using AI and machine learning as well. So at the same time, yes, going back to the question, stablecoin, I feel like that's going to be the foundation for any of these activities. And for example, when we are talking about deploying CBDCs, so maybe that will be deployed in a form of like a hybrid model where there is one element of decentralization and issuance will be, or it has to be a centralized model. So in that platforms or in that kind of an approach as well, I feel that stablecoin is going to be the key, the key foundation layer. So definitely that is something which the regulators will be looking at, and it is needed to be regulated, I believe.
Yeah, maybe if I could just add to that, I think I agree with both Dante and Vin. I think that working with the regulators is a must, right? Because mean, if you look what's happening in Europe at the moment, you know, the European Central Bank and the Eurozone are taking a very defensive stance, right? They're basically saying that they're not going to approve cryptocurrencies or stable coins, you know, unless they've originated from Europe, or unless they approve them, right? Which is a very, very negative and closed mindset, in my opinion. I think the way to resolve that is absolutely to work on this public and private agenda, right? So the collaboration between the public sector and the private sector. You know, the public sector will ultimately drive the policy decisions, will ultimately drive the political decisions, but the innovation is going to come from the private sector, right? There's no real history of central banks or governments, you know, innovating in the financial world, right? All of it's come from the private sector. So I think you have to work with the regulators. I think, you know, there have been other examples in the history of the finance where innovation has not worked with the regulators and then it's run into a brick wall, right? So the best practice, I think, is to engage with the regulators from day one.
Sounds good.
Yeah, and Masha, sorry, if I could just 1 second, just one small intervention, because I think James made an important point, which was the last time we had this big dislocation in the financial system, it was the 2008 great deleveraging, or the 2008 financial crisis, in which we privatized gain and socialized losses. And I think one of the issues and points that crypto and blockchain represents is the reverse of that. It's to effectively privatize losses and socialize gain, and to kind of put that model on its head. When you think about what a stablecoin represents, like USDC, it is a better model in some respects, financially and from a risk management and prudential point of view, than commercial bank money, where depositors ultimately suffer from fractional reserve banking, where the bank is ultimately able to lend out money and take risks and create leverage. These architectures are not replicated when it comes to a stablecoin like USDC. And that's an important distinction. That's a standard higher than you would see for commercial bank money and traditional deposit inside the banking system. And so I think this is part of where the argument we have to make collectively as an industry is that we're not eroding regulations nor consumer protection standards. We're actually making exponential improvements on a lot of the issues that regulators care about and want to see.
Sounds good. So can anyone comment on the existing regulations in the US which address specifically stable coins? Do we have them, and what they are, if we have any?
Well, I'm happy to comment as well, being the operator on the panel, Masha, and of course James or Vin, please comment as well. Clearly, we do have regulations in the US, and I think this would have been one of the big mistakes of other potential stablecoin issuers or stablecoin issuers that wanted to have offshore dollar-denominated structures. It was a fundamental critical flaw of a stablecoin issuer to issue a currency outside of the jurisdiction of the country of record. So if you're issuing a pound stablecoin, it would be prudent to put your pound reserves inside the UK perimeter. Same for the US dollar and otherwise. But we have rules, for example, with money transmission, which articulate two areas of risk that the regulators care about. One relates to the management of reserves and how those reserves are custodied, and what types of prudential approaches you can take with asset composition and investments and the rest. The other one is money transmission and the transmission of money and payment services, which is fundamentally what a stablecoin is all about, is about facilitating payments and transactions on the internet without buyers and spenders remorse being the reality. So I think we have very clear rules. And similarly in continental Europe and in the rest of the world, many countries have e-money or e-money tokens and similar payment systems infrastructure rules that we have to reconcile with. And I think, you know, many payments and innovative operators in the space learned the hard way that those rules were pre-existing. And then they're now trying to figure out how to back into them. We've taken that approach as a company at Circle, and we've licensed ourselves to the highest standards possible in the jurisdictions where we're principally operating in.
Yeah, just to add to that, I mean, I agree. You have to work within the jurisdiction that you're operating in. You know, that's something that Ripple we do with our global network. As we go into each country, you have to work with the regulators and often with the central bank. you just can't. I mean, the world is a big place, right? There's 240 plus central banks around the world, right? They're not all going to follow the same rules. So whilst the US is a very important market, obviously, what we found is you can't just apply one approach and expect that. You can't expect the US approach to work everywhere, right? Because it doesn't, right? So you have to have both the technology and the sort of the feet on the street to be able to actually operate within sort of local differences in the laws and regulations.
Okay, sounds good, right? So regulations are important. We should work with the government within the framework to make everyone happy and keep on growing our stablecoins space. So the name of the panel is also DeFi in Enterprise. So let's maybe turn into the DeFi in Enterprise, and please maybe feel free to comment on the most interesting use cases in DeFi and Enterprise that you've noticed in the space, and also which companies are using DeFi and how.
So maybe I will take this flow first.
Sure.
Okay. So in terms of our current stage where we are in the product development, so we are planning to launch within the next couple of weeks. So within the short span of last 3 months, we started working with a couple of financial institutions, non-banking financial institutions, and banks including, where they're trying to launch a service like this, which they used to run for their wealth management clients as an enterprise DeFi to roll out robo-advisory for their clients. So this is something like where we are seeing that, okay, so the clients are started moving from the traditional network to the crypto or the decentralized network, and they also want some sort of a security or a guarantee from these these platforms. So when they are rolling out a robo advisory like that, they will make sure that all the protocols or all the investment opportunities coming into that platform is vetted through, securitized, insured, whatever way they could protect their investors, and rolling out these into their client base. So that automatically brings in sort of comfort, which is not seen in the typical DeFi world, where we all know that more than probably 50% of the projects coming out, nobody knows who are the people behind. So these institutions and financial institutions which we are talking about, they're trying to shortlist each and every the protocol or the projects which they are planning to advise on. They do their own due diligence as part of the the service which they are providing and rolling out through the platforms like IBG to their clients. So definitely that is one space which is coming in enterprise DeFi. But at the same time, there is this, again, going back to how do you regulate DeFi, and that is again coming in as a big question mark right now. So yes, so the projects which is launched by regulated entities is much easier to regulate, but at the same time, which is actually fully decentralized without having any background, or it is fully driven by a smart contract. That is one space which is still regulators are trying to figure out. Even in Singapore, Monetary Authority of Singapore, they're still not having any specific guidelines for regulating DeFi space. But I'm sure when we are moving into the enterprise DeFi, the people behind or the centralized entity behind will be able to regulate easily. That's my take on this.
Yeah, I would agree with that. I think the enterprise DeFi is something that a lot of enterprises are looking to get into, but they're a little bit hesitant at the moment. I mean, they need stability and certainty in the transactions, and I think that's something that both the CBDC or a stablecoin can bring to the party. But I think also there are concerns about privacy and use of public chains. So it's a very similar discussion, I think, to the currency, digital currency discussion. I think regulation will come eventually, but the traditional players, in the enterprise world, they're worrying about things like KYC, and they're worrying about things like privacy and so forth. So I think it's very early stage in terms of enterprise DeFi compared to what we might think as more open and traditional DeFi, if that's the right expression.
Right. Yeah, I know that you were the founder of IBM blockchain business and grew it. That's impressive. Can you comment on IBM whether they're doing anything with DeFi, if you know?
It's 2 or 3 years since I was there. I'm not sure what they are doing in the DeFi space, to be honest. But yeah, thank you for that reference. It was a good job for a few years, but creating a new business from the ground up. And that's kind of what I'm doing now at Ripple, which is, we're creating this new central bank business as a new line of business. So there's some parallels there, but I'm not sure exactly what they're doing on DeFi.
Right, creating a startup within a startup. That's great. Dante, maybe you can give us some comments about the use cases that enterprise can have with DeFi. Maybe you can imagine how can they start using DeFi. For example, I have experience working at UBS and HSBC in wealth management in Switzerland, and I imagine that one day the Swiss private bankers would be offering to their clients DeFi. Let's allocate 5% of your portfolio to liquidity mining and see how it goes. So
Yeah,
when will it happen? Will it happen?
Absolutely. I mean, I think in the same way that corporate balance sheets are now accepting a position for Bitcoin as a diversified, uncorrelated asset on corporate balance sheets, I think the same posture will hold true for institutional investors, CFO, and corporate treasurers who are in the search for global yield in a market rife with risk and with complex anemic interest rates and currency issues at the macroeconomic level. The ignorance of DeFi and overlooking DeFi and institutional exposure to stablecoins and stablecoins being used to power DeFi offerings would be to not do your job effectively as an institutional investor or asset allocator. So I'm willing to make a bet that we will not only see this area continue to blossom, but you'll see, same with Bitcoin, that you'll see the institutional adoption flourish and a lot of blue chip names and corporates entering the fray. As I'd mentioned before, just today, Circle announced an early access period for an institutional grade DeFi product that provides the types of assurances they would like to see, but also the on-ramps to this exciting class of financial innovation.
Sounds good. Yeah, that's great news. We all hope it will happen. And let's look forward for the bright future of stablecoins and DeFi. Thanks, everyone. Thank you, audience.
Thank you.